If you already know how to trade, but you still keep losing money, this is exactly where it's happening. It is not your strategy or your entries, it's what you're doing in between. And I'm not here to call out any trades. What I'm actually going to do is sit here and walk you through how to think in real time when it comes to the execution loop in real time. Most of this is going to be me not trading, and that is literally the point. So let's just look at what's actually happening right now. Number one, what is price actually doing right now? I'm going to give you a few seconds for those who are watching after. This is a live video, but if you're watching after, I'm going to give you 60 seconds to tell me what it's doing, and then I will give you the answer of what's actually happening right now. I'm going to apply my buy sell volume bars back onto my chart so that we can be able to see both. There we go. And this is on the 5-minute chart, by the way. Also going to glance at the 15 and also glance at the 45-minute. And then we can glance at the 1-minute. All right, there's about 10 more seconds. And this is also power hour, which is basically the last hour of the day. As you can see, it is currently 3:15, which means there's, well, you can see it here. It's 3:15, which means there's only uh 45 minutes left in the market. So what the chart is actually doing right now is it's moving up pretty quickly. Why? Because number one, we can see from our volume bars that the buyers have taken over. And we can also take into account we're sweeping a previous high. And also just visually the size of our candles, right? We have a huge candle here, candle here. This is QQQ, by the way. Another large candle, and then right here. So these lines that are on my chart are arbitrary lines that signify support and resistance previously that has happened or occurred, and they're used as markers. They're used to say where price might reject from, or where price might have volatility, or where price might create structure. It's just a point at which price has been active previously. So what this means is it helps us to understand what's the speed of the market and what is actually happening. Now we can actually say it was moving up pretty quickly, but now we're rejecting. So our previous purpose and our previous thought process of what's happening is not actually holding completely true on this 5-minute time frame. This is the biggest thing I see when it comes to the execution loop and successfully doing it over and over to have profitability, is that you are not going back to your purpose of the speed and direction of the chart constantly. You are coming up with the thesis of what the chart should do based on something, and then you're holding that in your head and hoping that it keeps doing that forever. And that is just not the way the market works. The market could be going super quick up, and then it can slow all the way down, and it can reverse super strong and then go back up really slow. It can do anything that it so pleases. And so what that means is you yourself, tap yourself on the chest and say, you better have redefined and clarified your purpose before you get into anything. Because guess what? The chart doesn't care that you were in it inside of a trade. The chart doesn't care that it was previously doing something. It doesn't care that you think it should do something. All it cares about is what it's doing right now. So you're going to hear me repeat that. What is the market doing right now? What is the market doing right now? Because if you entered calls at the top of this candle, I would ask you why. And you would have to tell me all the reasons you thought why. But would you still think that same thing right now? Maybe or maybe not. Depends on how you read the market and how you interpret the market. Would you still be inside of the trade if you had entered right here for calls? For a scalp? Would you still be in? Would you still be holding? Some people would, some people would not. Some people have a very low tolerance to hold a trade. Some people have a very high tolerance. What is your personal trading style? Because this is where most day traders lose money. They see trades that aren't really moving. They're stalling. They look like they could be good, but they're not really moving at all. And then you still take a trade when there's literally no movement. And the rule number one is you can only make money if the market's moving. So if there's no trade, then what are you actually doing? You're saying, hey, I know I only get paid when the market moves. However, I'm going to still get in, even though I know it's probably not going to pan out to be anything. And then you blame the market. And that is just not how it works. So, what's happening is you're not actually losing because you're wrong. The market is still technically in an uptrend. So, doing calls right now is not technically bad. But also, this is a previous either support or resistance. So, it could be a support turning holding a support. It could be a resistance holding a resistance. It could be the support turning into a resistance or resistance turning into a support. So, what that means is you don't get to enter how you feel like if the area that the market is currently trading in is not also validating how you feel it's moving. So, you might be in calls, but if the market is literally telling you, hey, maybe this is a resistance zone, maybe price is going to come back down for a little bit and try to catch some more downward energy before it goes back up for a little retracement, right? Then you're out of luck. But guess what? What if it just goes straight up? What if it just sweeps all the way to 662? Then 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 you're great, right? You were in the right direction, not necessarily at the right speed, but you were here at the right time watching the right thing, right? It's three things. You're in the right direction at the right time, doing the right thing. So if you're currently in calls right now, you're actually out of profit. Now, price absolutely can come up to 622 and beyond and do whatever it wants to do, especially in power hour, which is 3 to 4 p.m. Eastern Standard Time, which is the last trading hour of the New York session of the market. And what that means is prices are normally a lot more volatile in the ending of the day. But guess what? It doesn't actually matter if it's normally volatile, what's happening right now. So you might literally be losing because you're trading when nothing is happening, or you're trading when your purpose is not here. You had entered here for some calls because this candle was super strong, but price never actually pushed up with strength at all. And now we're actually reversing with a lot of strength. We're actually halfway through our previous candle, right? So what that tells me is, hey, price could go back up. There's absolutely nothing that's saying price can't go back up, because guess what? Price can do whatever it wants to do. Repeat after me. Price gets to do whatever it wants to do. It's up to me as the day trader to be in the right place at the right time doing the right thing. So if I'm trying to make the chart do something by holding on to some calls right now, then I might not be doing the right thing. So what is actually happening? And what's even more important, why a lot of traders lose, and what's even more important is this: is the move already happening? Because you cannot try to capture 100% of any sort of move. You do not get the liberty of saying, oh, I'm going to try to call the bottom or try to call the top. No, what you get to do is you get to take a piece of whatever's there. Now, it's not something that you actually get a choice to do, though. I want to be very clear. I'm telling you that you don't get to choose if you get to take a piece of the market or not. The reason why you don't get a choice if you want a piece or not all you can ever get is a piece is because you cannot call the bottom or the top of any particular movement in the market. So if you cannot call any particular movement in the market, then you also can't say that you're going to take 100% of any sort of move. So, by the nature of the market, you only ever get to take a piece of whatever it gives you. You only get to take a part or a portion or a small amount of whatever the market decides to give. So this is where you actually might be messing up. If you're watching this video and you're realizing, whoa, this is exactly what I'm doing. This is exactly where I'm messing up. I already broke down the whole system step by step in the free private training. It's the first link in the description box. It's already linked there. Watch that video once and then come back and you're going to see everything a lot clearer of what I'm saying. You do not get to choose if you take a piece or not. So it's in your best interest that you actually say, hey, I know I can only get a little piece of whatever the market is doing in its move. So let me be in the right position at the right time, doing the right thing, and take my piece and go mind my business. Because the moment you try to make the market do something it's not doing, is the moment that you often lose money. You don't get to choose what the market does. You only get to participate in whatever it gives you. And the moment you try to make it do something is the moment that you lose. So you're asking yourself, what is actually happening? Or am I actually just trying to enter to catch something before it starts? You actually do not make more money by catching something before it starts. You make more money by taking a move that's already occurring. You actually do not have to be in any sort of particular direction at any given time. You can do whatever you want when it comes to the market. But the most efficient way is to just take a piece of what's already happening. So if you're trying to catch something before it starts, if you're trying to catch calls before the move is actually started, that means that you're not trying to catch a piece. That means you're trying to call the top or the bottom or the start or the end of a move. And that means you're not actually trading what's happening. You're trying to make the market do what you want it to do. This is where people say, I might take this because it might move. Might. It may move. And then guess what? You enter early and you're sitting there out of profit. Literally, think about it. How many times have you been trading? You enter a trade and you're sitting there. It hasn't moved in your direction. It could, it might, it may, just like right now, right? The three previous candles not showing any sort of volatility, but it's also not showing a reversal. So you may or may not still be holding for calls right now. But number one, if you entered for a scalp, you already broke your rule because this is way beyond a scalp. But let's say you entered for a little swing to hold for a few minutes. You are still entering early because the market is not doing what you said you wanted to take. And that is not a market condition. That is a guess. That's the difference between gambling and trading, casino and trading. That's the difference between guessing and actually being profitable. Profitable traders, we do not guess. We already know the outcome of a trade before we enter because we already do so much work behind the scenes to only pick the best setups. And we let everything else be taken by all the other people who want to be so willy-nilly and want to gamble in the market and just want to lose their money. That's what we do. We sit back and we snipe when we have the best A plus moves, and then we let everything else be taken up by all the rest of the people. So if you have to wait for your trade to start, I want you to ask yourself that question again. Have you ever been sitting in a trade and you're waiting for it to start? You're literally sitting out of profit. You're waiting for it to start. You're like, dang, I know it might move up, but also it might be trying to reverse, but also it might go up. So let me just hold it. Might go up, may go up means it's not going up right now, which means you're guessing, which means you're hoping, which means you're entering and hoping that a move happens. That is not trading. That is a guess. If you have to wait for a trade to start, when you get in, you're early. See, I learned this one thing from being trained by Charles Schwab coaching, and it's about the type of contracts that you buy. When you buy a contract, sometimes the contract you're buying allows you to wait for it to start, but for the most part, they don't. Terrible contracts. Terrible, terrible, terrible contracts. When you're in contracts that are not profiting when you enter, those are terrible contracts and you should probably stop taking them. They're probably way OTM, way out the money. They're not profitable contracts. So if you have to wait for your contracts to start getting money or to start gaining money, they might just be the wrong contracts. But if you know you're buying the right contracts, then stop changing the type of contracts you buy and start changing when you enter. Because if you're waiting for it to start, you're literally too early. You also need to ask yourself, is the move that I want actually moving? It is now 3:28. We have 32 minutes left in the market today. Is the market actually moving the way you want it to move? Depending on what you want it to trade. Ask yourself, Ask yourself, am I entering during the move? Or am I chasing it? Or am I guessing? If you're chasing, then you're late. If you're guessing, then you're early. I need you to write that down in every book you have in your house, in your notes app. Make it your phone screen. Put it in the comment section. Tell a friend. Send this video to a friend and tell them to write it down too. If you're chasing a trade, you wouldn't call it chasing. But you know and you feel like you're late to the trade. You're like, dang, I missed it. That means you were chasing it. That means it was done before you entered, and now you feel like you're late when you were really just tracing it. And if you're early, what's going to happen is you're going to feel like you're early. But what's actually happening behind the scenes is you're just guessing. You're turning the market, which is not moving, and you're turning it into something that is moving, and it's just not. You're trying to convince yourself it's moving, and it's not. Majority of the time, it's not moving. If you think about it this way, the market has to move, and then it takes a break, and then it builds up some pressure, it starts to move again, and then it takes a break. We see it all the time. It moves up and down and up and down. It starts and stops, it starts and stops. That's all it's doing. It's going in between different directions and different speeds. It's going up and down and up and down and up and down and up and down. And then it goes across in consolidation when, like, in this boundary, right? This boundary is 659. I'm reading the numbers here in the black box on the right side. So this is a 657, 659. We've been bouncing in between this range for a while. This is 1150, which is about 12 o'clock. So let's say 12 to 1 to 2 to 3. We've been bouncing in here for a minute. Right, $1 bounce range is not allowed for QQQ. That's like a shouldn't be trading in that range. All right. But what happens is that you actually take trades when the market isn't moving. But when I say the market's not moving, I don't actually mean it's just not doing anything. The market always has to move between up and down and up and down and slow and fast and slow and fast. What you actually need to worry about is how real is that movement? Because if you trade every time the market moves, you'll be trading all day long, losing money all day long. But what you need to do is say, hey, the movement that I'm trading is not real. This is not real movement. It is just moving, but it's not actual real movement. How many people are, like, even in life, so many people are alive. They're not living, they're not thriving, they're just alive, they're just breathing. Those are two different things. Having a life where you actually enjoy it and you're living and you're thriving versus literally just being alive. So that's a difference between the market. It's time where it's literally just printing candles and it's just moving up and down, side to side, but it's not really doing anything significant. Then there's times where it's literally pushing and moving, having real movement, and that's where you actually make money. So when you see real volatility, real movement, real moves, that is where you make the money. So if you're chasing a trade, you're late. If you're guessing, then you're early. And even right now, look at what we've done. We saw this huge push, even from this support line, right? Even called 658 a support. We have decided to break out of this range, and then we took a dollar, about a dollar up, took a small retracement, took another about a dollar and a half. No, just about a dollar. Another dollar up. A dollar candle push up or down is very common in QQQ. So, right, that would have been a nice move to take. And then it came to resistance. That's a perfect play, right? Use the support to push up, had a small retracement, pushed up another dollar. Like that's literally textbook. Took took the support to come back out of the range that we've been ranging in for since 11 a.m. or 11:50 a.m. Took a dollar push, came back down to a previous support, and then took another dollar push up. That's like literally textbook. And then it treated this resistance as a resistance and it came back down. What if you said, hey, I see all these green candles, a small retracement, and a big green candle. Let me get in for calls right here because it's going to break. Well, you would be wrong. It might still use this as another support and trail its way back up. But considering that it's 3:34 and the market is going to close in 20 some odd minutes, it's probably not what it's going to do. And also, I would be weary to enter in for calls when the current candle is a large red candle. I see it all the time with my students in my community. Right? If you want to work closer with me, you want to apply this execution loop exactly, like know the exact system for it to work with me closely. Information for that is in the description box. Also, the pinned comments of all of my videos. And what happens is that what I see is, oh, I was in calls. This is what they say. I was in calls, but, and I'm like, okay, that's fine. Tell me where you entered, where you exited. And when I look at candle they entered on, it was literally opposite color of where they were supposed to enter. So they were either too early or too late. It's because there's not a lot of proper precision. Is the stock actually moving? Are you entering during the movement? Or are you chasing it? So if you're watching this video and you're like, whoa, this is literally what I do. This is literally what I've been doing wrong. I've been taking all these movements, but really none of this is real moves. I already broke down the full execution loop system, broke it down step by step in the free private training. It is linked in the description box. It's free to watch. Make sure to watch that video. It's not really negotiable. You really do need to watch it. And then come back and you'll see these videos a lot clearer. Because the next thing you, like, even if you are doing your positioning proper and you are making sure that you are entering during the trade, you could still be doing this wrong and it won't matter. What you could be doing wrong is entering with the incorrect size. Because what happens when you change your size is you change your behavior. You don't think that's happening, but it's exactly what's happening. Every time you change your every time you change your size, you're changing your behavior. I give you a way to not do that inside the execution loop system. It's not about how much money you have in discretionary income. It's not about how much you can throw into the market. It's not about how much you feel like you should trade with. It's not about how much some random person told you to trade with. It's about you and you understanding that every time your size changes, your behavior changes. Now, riddle me this. Can you have consistent results doing random actions? The answer is always going to be a resounding no. Every time I put somebody in the execution loop system to learn, all it does is it removes all of the random actions you're doing and it gives you consistent action so you can have consistent results. That's literally the whole outcome of the whole system. So if you've been doing random actions and you think it's going to lead to consistent results, you're sadly mistaken. So number one is your size too big? And are you repeating the same size over and over and over? You need to be repeating the same size because you're going to increase your hesitations every time you risk too much because being 10% down on $1,000 is a lot different than being 10% down on $100. That is a huge difference. And depending on your financial situation, you might not want to take that risk to hold it to see if it's going to lose you more than 10% or if it's going to recover out of 10%. And that's a very real situation. Think about it. If you're looking at this chart and you're 10% down, let's even add right here. I'm not even sure if I'm logged in to my paper trader, but let's say that I am going to just log in real quick, okay? So right now we've entered in for a call, right? And we're gonna watch the percentages here. And we entered at 6607, right? Where this blue line is. We're about to be break even right now. Soon, maybe. But let's say you enter into this trade and it's down 10% and you risk $1,000. As you can see, we only bought one share right here. This trading view does not do options. It only does futures. So this is a share. One share is 660. So I spent $600 to buy that. What that means is that if I'm down 10% on $600 versus if I had bought 10 shares, each costing me $600. If I know that I only have a certain amount of money to my name, it's going to cause me a lot more stress if my size is too big. It's going to cause hesitation, and your size changes how you think, period. It just does. When you try to convince yourself that it doesn't, that's when you're going to lose a lot of money. Now, I try to move this. Now we're breaking even because you see that the numbers are changing here, right? Now, the reason that I am moving this is because I don't want this to be in the way. I want you to see the percentage and also be able to see the current candles. So even if your size is something you're comfortable with and you're not hesitating and you're able to execute properly and not hesitate and you're actually able to do the full execution loop properly, you still have to be able to ask yourself, am I trading? Like, when I look at this trade, what would I be thinking right now? Is it, let me just take one trade because I just want to take one trade? Or is it, this looks like it's about to push up or push down, so let me just get in, right? And the reason I did calls just now is because I just pressed the buy button. It wasn't because of any particular reason. I just decided to press it so we can look at the percentages here. But the thought right here is where the mistake starts. Because when you start to just get in for no reason, just like I just did, guess what? Now we're down. And what am I supposed to do? My only option now, think about it. Every time you're in a trade that is losing, what is your options? Your options are get out at a loss, get out at your current loss, get out at a larger loss if you keep holding, or wait for a bigger loss if you never let it, if it never recovers. So we can say, oh my gosh, this arbitrary support that we have here, right? We have this arbitrary thing right here. And what that means is, or this arbitrary support, sorry, right here, it may or may not have acted as support or resistance. It may have acted as both. But let's just say right now, let's just call it I mean, obviously it's a resistance reading, it's a support. But let's say it's a support line to make it more simple. Let's say it does act as a support and price pushes all the way up here by 4 o'clock. You would exit in profit. But tell me, was that a random decision to enter and exit? Or was it actually a consistent thing that you could do a repeat system? That was absolutely random. And I just told you that you cannot get consistent results doing random actions. A lot of day traders are doing random actions. And that is what's making them lose. And you might even be watching this video right now. You're like, oh my gosh, this is what I'm doing. Go watch the free private training. I already broke down the full system because that is why you're losing. You're doing a whole bunch of random actions and you're hoping for a consistent result. It's never going to happen. What I see so much in my students, in my community, if you want to work closer with me, there's information about that. But they will say, oh, I want to have smaller losses. I want to have consistent execution. I want to win more. I want to work less. I want to be more profitable. I want to have all these different results. But there's no actual consistent system that you can follow to get these results. Like you want these results, but you don't know a system to get you there. So you're just doing random things, changing random things, trading random amounts, trading random stocks, just trying to make money every single day, trying to hope that it works out. Again, you're hoping, and that's not how it works. There is a system of exactly how the market moves that will pay you on a repeat basis because I'm telling you, most of the market movement is not movement. And when you break one of the rules that I just explained to you in this video, you have to be able to get out of your trades and say, I'm not trading anymore for the day. Not, oh, I'm not going to trade because I'm scared or I'm this or I'm that. No, literally, I have to build the skill of saying, I'm not trading anymore because I broke a rule that I wasn't supposed to break. That is how you build a muscle. You just keep doing it until you no longer break it. And what happens is that if you don't know how to stop trading, and the only reason you stop trading is if you keep trading until all your money is gone, because something's going to stop you. Either you stop yourself or losing all your money and literally having no money to trade with will stop you. So you have to build the skill of stopping on your own. I'm telling you that you cannot be profitable unless you have the skill of stopping on your own. Because if you cannot stop trading on your own, especially if you're already in profit for the day or that week, what's going to happen is you're going to give back all the money that you just made. Even though you know how to make money, you keep giving it back. That is how accounts get blown. And this is usually where you mess up because you know how to make money because you're experienced. And that is what you're doing wrong, is that you're not waiting and you're not stopping and you don't have a system that you could repeat. What matters is that you have a system you can repeat. Any person on earth can make money in the stock market because it's a 50-50 chance. It's calls and puts. If you think it's going to go up, you click calls. If you think it's going to go down, you click puts. Like it's a 50-50 chance. It's not that complicated. But who are the profitable people? We are profitable. Profitable trades are profitable because we have a repeatable system that works with a market that is unpredictable. We don't bring random action to an unpredictable market. We bring strategic system to a uncertain market, and then we can take money out of it. And we can be at the right place in the right time, at the right direction, in the right speed, more times than we're not. And that is the difference. So if you already know how to trade, you already know what to do, but you still can't actually capitalize on your skill, that is what that free private training is for. Because right now, what has price really done for the past 20 minutes? This is on the 5 minute chart 5, 10, 15, 20, 25, 30. For the past 30 minutes, what has price really done? Like, what has it actually done? If there is not a move, like, then there's just not a move. There's nothing to do. There's nothing you can do about it. In life, in life, you can't make the chart do what you want it to do. You do not get paid for being in the market. You don't get paid because you can press a buy or sell button. You get paid because you can be in the right place at the right time, in the right direction, at the right speed. And you can do that repeatedly on a looping basis. You go through a set of rules and then you just keep looping it. Every single trade, you just follow the same set of rules over and you do them over and you do them over and over and over. You start, okay, what is price doing right now? And like, is it actually doing what I think it's doing? See, another reason you might be losing is because you think price should do what you want it to do. And because you think price should do whatever you want it to do, you refuse to double check what your thesis is. So in trading, you can either be scalping or swinging, short term or long term day trading. That's seconds to minutes, or like really up to 60 seconds for scalping generally. So up to 60 seconds. And then it's minutes to tens of minutes for intraday trading, which is basically trading, buying, selling during the day, but holding it longer than a scalp, which is swinging. What happens is that when you're in a trade, you don't understand, or when you're thinking about taking a trade, you don't understand the market is going to constantly switch between its nature. It's going up and down, and it's switching between slow and fast. It's going to keep switching between all of those. So if at 1 o'clock, no, let's use an example right now. At 3:50, you're like, okay, the market, actually use this example. You're here. You're like, okay, here at 2:45, we're looking at this black box here at the bottom, says 2:45 p.m. Eastern Standard Time. Market was moving super quick. And because we're visually seeing large candles, that's one of our confirmations. We're seeing these large candles. Hey, some people will say, because the market had been down for the most of the day and then it kind of bounced up and now it's being strong with actual large candles. Because when you're scalping, you're looking for big boy candles, big strong candles. In comparison to swinging, you can really trade small little baby candles. That's what you really want to look for because that signals a long-term movement. But what you're doing is you're saying, hey, market was moving strong up. So that means that it's going to keep going up. And you refuse to acknowledge the fact that you can't change what the market wants to do. If it's going fast up, these big candles, has a big move up, $1 up, slight retracement, super small candles, perfect textbook retracement for a continuation, pushes back up $1, and you're like, well, it's going to push more. You just made the market do what you wanted it to do. What are we actually seeing? Holding at this resistance, strong reversal, holding its weight right here at the same previous retracement. It's now approaching our next low, trying to sweep our last low, or trying to sweep below our last high, excuse me. So it's now trying to create a lower high. But in your mind, all you care about is what it just did. It sounds really crazy when I lay it out that way, but that's how most day traders are trading. And so most people would still be here holding a call, holding it, just holding it, holding a call right here. Right, I entered this call here at 6:06:07. They're just holding it as price is literally reversed and it's still pushing down. They're just holding it, hoping that it goes back up. And it might, but at the end of the day, price does whatever it wants. So it would be in your best interest to sell it. Even if you're out a lot of money, you might need to sell it. Because you have three options. Once you're down in a trade and it's reversed in your favor, like reversed out of your favor, you have three options. You sell at your current loss right now. You hold it and hope that it continues to take you out of profit so that you can lose at least a little bit less. So maybe if you're down 10%, you wait for it to get back to 5% out and then you get out at a smaller loss, or you actually still commit to the trade and you hold it, potentially losing your entire premium or your entire risk. Because you can only lose, well, without margin and leverage, if you're trading individual cash, you can only lose everything that you risk, which means that if you paid $600, your full risk is $600. Now, if you don't care about a $600 loss, congratulations, there you go. But if $600 is a lot for you, then you really just risked everything. And notice how I said everything I just said. None of that was a consistent, repeatable system that you could have repeated again. Even if you do enter, even if you do exit in a profit, you cannot repeat that. You cannot repeat it. Any person can make money in the market because any person can see if the candle is green or red. Any person can do that. But only us profitable traders can say, I have a repeatable system that can tell me how to be in the right direction at the right time over and over and over and over. Not just one off, but like days and weeks and months in a row where your losses are naturally small because of a repeatable system. So if you're watching this video and you're like, whoa, this is literally like you're realizing it like real time. This is exactly what you've been doing. I already broke down this full system step by step in the free private training. It is linked in the description box and the pinned comments of all of my videos. Watch that one time. And then when you watch these live execution videos, it's going to be way clearer on why your trades aren't working. See, you have to get rid of the belief that the trade is going to do what you want it to do. Your job is to be at the right place in the right time in the right direction when it does what it does. When other people decide that they all want to accumulate their buys or their sells and they want to have pressure in the market, or everyone's having a collective opinion about if a stock should go up or down, you need to be in the right direction. Because only now are we back to break even, where you see our percentage is now going break even. So instead of entering at a point where you thought price was going to push, why don't you enter when it's already pushing? This is the reason why most people don't do that, because they like to get in early or they like to chase a trade. And what does it do? Mostly ends in loss because it's random behavior. And random behavior is never going to lead to consistent behavior. There is a difference between the market moving and it not moving. When I say the market's not moving, I don't literally mean it's just moving in a straight line. What I mean is there's no definitive direction or speed that it's going in. That is true for the most of the market because it has to change speed and direction to keep moving. The market's just not going to move in a straight line forever, even if we go up to the 1 day. And let's just look at what's happening right now, which looks so much better than it did this morning. All right, look at all these lines I have. Um, and these are all like real-time traded lines from like when price was, wow. I mean, that was amazing back in March when we finally hit our base. And now we've been rising since. But what happens is you want the market to do what you want it to do. And it's simply not going to do that. The market is not just going to move in one straight line, even if you look at what's happening now. Like you can look at the 1 day, you can say, oh, it was moving up. It's been moving up. It's just been moving up. But if you actually, I mean, I was trading during all this time. Was it actually just moving up? No, it was stopping and starting and moving up and moving down, and it was stopping and it was starting. It was going slow, it was going fast. As you can see, some of these candles are large, some of them are small, some of them are weak, some of them are strong. Um, and if you haven't watched my candlestick strength video, it's already in playlist on beginning to learn how to trade, you need to watch that video to like it's just the best tutorial on how to have the skill of reading candlestick strength. It is a video called Trade Smarter, Read Candlestick Strength and Catch Momentum Early. And it's inside of a playlist that is called Start Trading from Zero, Step by Step Roadmap. You need to watch that video because that's really going to help you to understand. But that's why we have the different strengths that we have. We have different strengths because we have different speeds of candles and different movements of candles. Doesn't mean it's not doing anything. It just means it's not doing anything significant that can actually make us money because we only make money when the market moves. Now we're back in profit. But is this actually something tradable that you could have traded if you wanted to enter now? The answer is no. So resounding no. The market's ending in a minute and 20 seconds. And this is usually where you mess up. You're just trying to get in, trying to make money. It's not going to pan out in a consistent way because that is not consistent behavior. You have to act consistently and you will get consistent results. If you act randomly, random actions, random sides, random entries, random exits, you're going to get a random result. Notice how most of this video was just sitting and waiting. That's the part nobody wants to do, but that's the part that makes and keeps your money. If you do not trade when actual movement is happening, you're probably never going to have a repeatable system. And if you can stop trading when you already are profitable, you're already better than the majority of day traders out there. So if you want the full breakdown to this system that I just used in real time, go watch the free private training first and then come back and use this as a real-time practice. And that is how this stuff is actually going to start to click, where you can get out of the habit of having all these random actions and you can start a actual repeatable